Welcome to Indices, and sorry for being a bit late. I don't know where the time goes. It's I start sort of just after 2 in the morning these days, and just seems to take quite a while to do all this this work. But look, anyway, back on track. The US 10-year notes move opposite to the stock market, the indices and stocks. So on this weekly chart here, we can see that we're in a definite pennant corrective pattern here, and being corrective after the trend comes in this direction, it's definitely going to break down towards the 120 mark and even lower. The current sort of support is the 124 area through here, so we've still got a little bit more sort of price activity to go before we get this fifth wave to the downside. But the important thing is that it's very clear that the notes will work lower and the stock will work higher. So that's important for us when we're trading, especially the US share CFDs, because we're getting some really nice trends from those markets. So back into the S&P 500 here. Just on this 4-hour chart here, where we're working the 5-wave structure up through this area through here. And yesterday we were looking for a little move into the group 2 area here at the 1965. We've got that now, and now we're looking for wave 4. Now wave 4 can pull back 38.2% of the third wave here, which would leave us just above or around the 1950 area here. The midpoint, also very important, was resistance, now support. So yeah, currently the market sitting on the 1960 here as support through here, but we expect some sort of little bounce off here, maybe not that big, but some sort of bounce depending on the cash. The cash is also sitting on 1960, and we'll look at a move down to the fourth wave of 1 lesser degree or into the 1950 area through here. So basically an A and a B and a C here. Yeah, look, if I'm wrong, and we get a break, back above the 1965 here, that cash will lead the way on that. Then just go long from there and trade to 72 and exit at that point. So look, for the next session or so, we're looking at an A wave, a B wave, and a C wave, and that's pretty much the same in most markets as well. And we'll have a look at those. The DJ's much the same. Yesterday we were looking from wave 4 here. We were looking at 1, 2, 3. Well, in fact, we're over here. We were looking for a move to going long on 16,950 and exiting at 17,000. But obviously it didn't quite get there. But you would have seen weakness eventually and done what you needed to do. However, the 16.9 here is the support, and it's likely that this market will move lower through here because I've had a look at this little pattern in here and it's corrective. So whatever happens here, it may go a bit higher, whatever, but it is corrective and eventually should move down into the wave 4 of 1 lesser degree. So if it moves down through here and then finds support on the 16.9, then that's the time to go long, and we'll be looking for a move above the 17,000 this time around. The DAX is a little bit of a tricky sucker because, as I mentioned to you, when we get to, we trade it to a large number and we just exit and find another market, because the swings will just start getting larger and larger through here, and large numbers, whole numbers, even numbers attract larger orders, and the market's going to find it quite sort of sticky, and it's going to skew wave counts and so forth. Now, I've changed this wave count here. Well, it's not that I've changed it, I've just created an alternative count here, and that would be that this move up through here is actually wave B, and that suits quite nicely actually when I look at it on the cash market, and that's why I've done it. Not that it makes a big difference at this stage, however, we're still looking at a move down through here. Obviously the market's sitting on 9.9 here. Now, if on the intraday, if the 9,930, the top of group 1, finds support, trade long. If the 9920, the pivot within subgroup 1, finds resistance there, then we're going to get a break below the 9.9 through here. It may not come all the way to the 9.8, but partially down. We'll be looking for 5 waves down and then a move to the upside there. So look, like I mentioned before, I'm not that interested in this market at this stage because it's just not the time or the place to pick up a trend. The FTSE, look, it's testing the 6.8 here, and all that's fine. We can get a rough looking sort of 5 waves out of this move up through here. If the DAX is going to be corrective in the next session and the US markets are going to be corrective in the next session, then it's likely that this is going to retest lower through the 6.8 here. So there's nothing sort of cooking here just at the moment, but we want this correctional pattern here to complete and show us some light to the upside. Now, the light to the upside would be 68.30, the top of group 1, as support. Then we can go along from that point. However, if the market trades back below the 6.8 here and spends some time here and then finds some support up there in line with the understanding of the US indices and the DAX moving lower as well, and if this can move lower as well and then find support on the 6.8, well then you can go along from there and scale in on these numbers here, and we'll be going higher from that point. This is not very clear here, so I can't give a clear indication. I can only sort of skew it in with the other markets as well. But we are looking for a lift off this area here. We're looking for a lift off here. It's just a matter of do we get another test lower first and then up? So better off to look to UK stocks as they're going to lead, and you can find the leading stocks in those, and it's a much easier game trading stock than it is picking these things, I have to say. The Australian market, the CFD over the SPY and over the cash market. Look, I'm just going to stay in the intraday zone here. We worked this low down through here. We expected the market to pop up, and it's sort of done that, and all that's okay. But what I'm getting in here is, and I've drawn it in this triangle pattern here, which may be a fatal mistake, but what I am seeing is I'm seeing this move down through here in 3 waves. I'm seeing this in an ABC to the upside here. I'm seeing this move here in 3 waves. This one here is a little bit tricky to work out. So a triangle is 3, 3, 3, 3, 3. So basically an A, B, C, D, and E. So it's quite possible over the next session or two we experience a test of the 54.20 area through here, in line with the FTSE, that may be the FTSE, but the DAX and the US markets as well. So look, a bit more of a complicated correction happening here, before we see a move to the upside here. So I can just bring this in here a little bit just to sort of show you a little bit. So this is quite clean here as sort of a little 5-way move down through here. And this is also like a little 5-wave move down here. Then we counted this up here as 1, 2, 3, 4, 5, to 5 to here actually. 1, 2, 3, 4, 5. Correction, 1, 2, 3, 4, and 5 here. So 3 waves here, another 3 waves here. This one here is basically a smaller picture of the previous one here. This one's a little bit tricky to work out. It does look impulsive, but it's also sort of quite creepy as well. Very small and difficult to sort of work out. Other good points here are that the 54.50, the midpoint here, the cash is just trading slightly above the 54.50, so there'll just be more vibration around here. No news really coming out. There's the CB China leading index figures coming out at 12 p.m. They won't have a big crunch on the game, but they may have some influence, so I've noted that in the text. But look, if the 54.50 becomes a really nice support, then by all means move to the upside. Tuesday can be profit taking in the morning, and then the trend resuming in the afternoon. So take that on board. If you see strength in the afternoon, then by all means, look to the upside. From yesterday, it appears that the that the material sector was leading to the upside, but we sort of understood that anyway before it sort of happened. But one of the things here I'd like to bring our attention to is just going to bring my Trading Levels charting program here. I'm just going to put in BHP. It's probably not very easy to recognize actually in this here. It's not really. But this low in BHP here, and in the US BHP especially, you can see on intraday that we do have we have a 5-wave structure to the upside on US BHP, so we can expect some type of correction to occur here, and then we can expect another push to the upside here. How far that goes will be yet to see, but just pointing out that there is an impulse wave on the US intraday over this last week here to the current high last night. And the US BHP was up quite strongly, nearly 2%. But look, anyway, what it did do is just create that little impulse wave here as such. Right. That's it. Alrighty. Thanks for listening.